Well, the financial world was in a tizzy after Jerome Powell said at Jackson Hole that he intends to go after inflation. Even if there is a longish slowdown, he intends to hike. Risk assets fell on fears of recession, but is a recession round the corner? Will it be a longish slowdown? Should we therefore not buy the dips? To answer some of these questions, we have with us someone who excels in forecasting business cycles. Lakshman Achuthan, the co-founder at Economic Cycle Research Institute. Well, much regarded for his ability to be able to guess the turn of the business cycle. Lakshman, thank you very much for staying up for us. Okay, well, let me start. The markets did fall, especially immediately after on Monday, fearing a recession. But if you looked at the US, the GDP has been falling for the past 2 quarters. Yet, as the Nobel Prize economist Richard Thaler on CNBC said recently, this doesn't feel like any recession because job growth, consumption, everything is so good. What's your take? Are we on the road to a long slowdown?
Well, I think both things can be true. It could not feel like a recession right now, and I think that's accurate in the sense that coincident indicators, things that tell us about the economy right outside our window, they're not completely recessionary, and labor markets are a good example of that. On the other hand, our job is very much to assess the cycle risk, what's likely to happen in coming months and quarters. And to do that, we look not at coincident data, but at leading indicators. And at leading indicators of the economy, they are, there's no other way to say it. They are downright recessionary. It would be irresponsible to not say that they're recessionary. So that's where we are. It's not the end of the world. We think we understand the circumstances of this recession. And it is a good idea, therefore, until the end of recession comes into sight in the forward data, to be a little more cautious, be a little bit more risk off.
Yeah, but there is data to the contrary, as you also agree. Powell said labor markets are exceptionally strong. Is it possible that despite the rate hikes, consumer demand remains strong because of the strong job growth and the economy bounces back rather than keeps on going down?
Never say never, right? I've learned that in my decades of watching cycles, but I think it's highly unlikely that will happen. I think the path to a soft landing has been becoming extremely narrow since the beginning of the year. Again, now, to put what is happening in cyclical context, we have been slowing. A cyclical slowdown has been going on since spring of 2021. Okay, that's a long time ago. That continues. And the question is, can we get a soft landing where we avoid a recession? Now, sure, we hope for those. We always hope for those. But the Fed and other central banks were so slow in fighting inflation that now they are having to prove how strong they are. And Mr. Powell said that last week. And we're going to fight inflation. And if we have to choose between a recession or inflation, we're going to choose a recession in order to combat inflation. And so that is the course the Fed and other central banks are locked on right now. They are tightening into a sharp slowdown. And it's not unusual for labor markets to hang in there right until the recession starts, or even a couple months into the recession. And because of some of the strangeness of the COVID recession of 2020, there's still that might have something to do with why labor hasn't fully started to contract just yet.
So what you are seeing is earnings growth will keep slowing from here on.
Yes. So I think if I was to try and understand what the market's doing, right, and that's hard to do sometimes, yes. But we see a 24% decline in equities this year. That's typically called a bear market. And when you look into why did that happen, I think people largely ascribe it to the Fed starting to hike rates. And
Yes.
so we had an interest rate adjustment on the valuations of the markets, and that's what that was. But there wasn't much adjustment on earnings expectations. And that is, a recession is about destroying demand growth. And so it's very hard to imagine how earnings are unaffected by a recession. And you're starting to see that. I know that we've seen good top line stories about earnings through Q2. But remember, that's backward looking. And we're looking forward. And when we look forward, there seems to be a little bit more trepidation, even among the managers of the large companies.
So in that case, you're saying we should not be buying the dips because the market will logically fall more as it realizes that earnings are falling.
Yes, and I want to talk about one more point, which not everybody is aware of. We look at cycles globally, right? So
Yes.
we're looking at over almost a couple dozen major market economies, including the United States and Europe, Japan, even China, in India, and the major emerging markets. And the long leading indicators for those economies are in their weakest configuration that we've seen anywhere other than a global recession.
Okay.
So that's a global cyclical slowdown akin to, there's a risk of a global recession. Within that, that's happening. Okay, that's our analysis that that's happening. At the same time, more central banks than ever in history are raising interest rates. And so that's a very toxic combination. It makes it so that there's no clear locomotive of growth to pull other economies out. And so here we have the Fed being very hawkish. That makes the dollar stronger. That weighs on emerging markets. I think the one silver lining I could possibly see for India is that, unlike other emerging markets, which have a lot of exposure to commodity price inflation, they need commodity price inflation. India, of course, does quite well when oil prices, energy prices are coming down, kind of helps the trade deficit and things like that. So that could be a silver lining here. I'm trying to look for some good news. And also, we will survive the recession. We've in the United States we've made it through 48, so we'll make it through this one too. But I would be prepared for a rainy day.
Okay. Well, since you just referred to India, is India in for a longish slowdown?
Yes, I think cyclically in terms of growth, India is in for a slowdown. It's very hard to completely disengage from the global economy, but with the risk off that we're seeing on emerging markets, you have seen of late, the domestic investor in India is participating a lot more. So I think it's mitigating the downturn to some degree. And in terms of just the structure of the Indian economy, as oil and energy prices continue to edge lower, that I think is supportive of the overall Indian kind of trade with the global economy. I think that's a positive, probably.
Okay, and you also referred to inflation several times. Now, many, including Jerome Powell, believe that inflation has peaked. Yet there are people like, Zoltan Pozsar of Credit Suisse, who are saying we are going to see a decade-long inflation. What's your take on that?
Sure. I think he's making some interesting points. They're structural points. He's talking about deglobalization. In fact, that's been going on for almost a decade now. I mean, it's not new, but I'm glad it's being recognized. Certainly the Cold War with China, not helpful. I think the demographic issues, not helpful. So these are all structural things which are going to lift the level of inflation a bit, right? But then on top of that, we have the inflation cycle, the acceleration and deceleration in inflation. And on that score, I think cyclically, it's not structural is 5, 10 years. Cyclically is a few quarters. So cyclically speaking, I think we have seen the peak in inflation. With this, probably related to the slowdown, a recession is going to probably make that go down further. The problem is, and this is why Powell had to kind of lay down the law on Friday. The problem is that having a peak at 8 or 9% inflation and then coming down to 7 or 6, that doesn't mean they've accomplished their job, right? They need to get substantially lower. So yes, we have a peak, but the level is uncomfortably high, which means the Fed continues to tighten into a cycle slowdown, which virtually guarantees a recession.
Oh, fair point. Well, the next big question for us, for the markets, is that the US economy, will it manage a soft landing? You touched on it. Will Powell be able to stop at just the right spot to ensure that he doesn't push the economy over into a deep recession?
I hope that somehow that can happen. I do not have any analysis or research that points to that conclusion. To the contrary, the research does not point to a soft landing because the Fed, prior to this inflation cycle upturn in 2018, 2019, changed its policy framework from being preemptive and trying to move ahead of the cycle to being much more reactive and waiting to see the cycle before they changed. And so when I hear him say, we need to make sure that inflation has gotten under control, if you translate that to cycle speak, that means I'm not looking at leading indicators. I'm looking at coincident data. So I need to see the coincident inflation data way down to where I'm comfortable before I ease off. And he has often invoked Volcker, Paul Volcker,
Yes.
the chairman in the late 70s, early 80s. And Volcker famously pivoted after the 1980 recession, which was a short recession. He pivoted and he became easier, and inflation pressures very quickly moved up. And so he had to put on the brakes very hard, and we had a large global recession in 1981-82. Powell does not want to go through that experience. And so he's trying to avoid that. Now, separately, I know Powell has also invoked Greenspan. Greenspan's interesting in the 1990s because in 1994, completely different policy framework.
Yes.
It was a preemptive policy framework. And before inflation really started going, the Fed raised rates in early 94. And before inflation really receded, but the forward-looking data on inflation had turned down, he eased in 95. And in retrospect, that was a pretty good expansion. The 1990s is looked at as a pretty good expansion on the different marks that you would give for an expansion. And so this preemptive soft moment of policy maybe had something to do with that soft landing in the middle of that decade. And so I know Powell wants to be that, but with his framework, it's difficult to be that.
Okay, just one final quick one. Will the Fed hike even beyond 4%?
Above 4% remains to be seen. I don't know that they will do that. I think if we were to get some extra sticky inflation numbers, they could be pushed to do that. I think if for some reason the market ran up strongly, they could also be induced to do that. So on the inflation side, there's this calculation around rent that goes in, right, to the CPI numbers, and there's some other health numbers and services numbers that are relatively high, and those can be kind of sticky. So there's a risk there. And then in terms of the market, while certainly I see cyclical risk, and I think earnings growth is coming down, and so on and so forth, Sometimes the market disconnects from the cycle. It tries to anyway. It might try to do that, as it I think tried to do over the last few months. And Mr. Powell came out and kind of reminded them of what he had said earlier.
Okay, fair point. Thank you very much, Lakshman Achuthan, for joining us. It's not a very encouraging conversation. Lakshman doesn't see the chances for slowdown. But at the moment, markets are not looking like they're believing that. Markets in a risk-on mode. We wrap up on Bazaar on that note. Chartbusters up next.